Good weekend, all. Ira Epstein, and here we are with your weekend edition. Yep, we're going to look at weekly charts on your stocks, your ETFs, and your spiders. So we'll look at all three of those. This was the week of the Fed entering a rate cutting cycle. This has been coming for a long time. The market has been betting for 2 years on how far they were going to raise rates. They're not. And then what's the market going to do? When is the Fed going to begin cutting rates? Is it going to be 50, 25 basis points? That's all behind the market now. Now it's a question of how often and which month will they do it. Because to get where they're going, you cannot get a rate cut at every meeting, all right? It's impossible. If the Fed's going to say where they're going, their goals. Let's assume you end up this year, 2024, in the neighborhood where they think a median price, 4.5, 4.4, whatever it is. And then they want to drop the market down next year 100 basis points. That's 425-point cuts. Could they do 450s? They could, but then where do you? You're beyond their total goal. So this will be the new thing that we argue about, what it's doing. And then sooner or later, we'll get to the point, well, are we at a neutral rate? Is the Fed ready to stabilize things? Are they going to finish with the runoff of balance sheets? There's so much to talk about. But understand where you're at. You're at the point now of rate cuts. That's the important thing. Presidential election will pick up. A lot of talk about it, and obviously it's a horse race. We know that. Trump has been uncannily quiet, all right, and we will see. And Harris is going to pull out Oprah. Now, is she sitting down for interviews with real newscasters? Oprah's a show personality today. She's not a real newscaster. She's a show personality. She's, when you're on the stations, when you've done it. I knew Oprah in Chicago and went out to dinner with her a bunch of times when she was a young newscaster. One of my good friends was friends with her, and she would come on, pleasant lady as can be. And then I happened to live in a building, and I was president of it, that she bought in Chicago. So I had to deal with her and, again, her manager at that time, an architect. And that was a pleasant experience. So a nice person. You know, Chicago, it's a big city, but it's a very small New York, and everybody knows everybody if you travel in those circles. So it's still fun. All right. So we look at where we're at, and I was looking at what markets would be the right ones to buy. We've covered Home Depot. I like Home Depot. I think that as you cut interest rates, that's going to be a good one. You know what we haven't covered? Restoration Hardware. And I looked at the chart and trying to pick something to do, and I did this one on my own this week. I'll ask you next week, and I'll give away a gift if I choose yours, but this was my doing. And I looked at it, and I said, I think a major bottom is formed in this chart. And I said, now, I know the company. They have one in Chicago, and you go there. You're not only shopping for their products, it's a dining experience, which is beautiful. And they've got these now. They're opening in Milan, London, Paris. They've got a bunch of them in the United States. And the one in London, I believe, is on an estate of 73 acres. So it's an experience that you get there. And that's their ideas. Their ideas is tying together all this. And they're after a certain clientele. They're not after the Wayfair client, all right? And I'm a Wayfair client, by the way. I buy Wayfair all the time. They're after that scale beyond that, all right? Will the designers in Europe take to them? Who the heck knows, all right? We'll find out. But here, it's popular. The products are nice. And if you go and you look, it's a quality product, no question about it. So that's where you're at. So I said, let's take a look and see what we've got. So here's Restoration Hardware. You can't get away from the fact that this market has been going and fighting a battle down here just above the 2.25 area. This isn't cheap today. It's $344, but it's just breaking out of that, all right? The first time this market really did anything to interest me was last week when I started looking. You still had the lower highs, lower lows, and then you had a huge outside week, and it changed the whole landscape of the chart. And by doing that, now the market's coming into another resistance point, but I seriously doubt, unless the economy falls apart, that this company's going back down to that 2.25 area, and I have goals that are up from here. So I looked at the chart in the swing line, higher lows, higher highs. I looked at the moving averages, and let's step back and do this together so you see what I was fighting about. Let's see if I can do it this way. Will it do it? Yeah, one more. There we go. I want to do it this way. This market had been fighting a battle for months between the 100-week average in green, the 18-week, back and forth with the swing line, trying to break itself down. You do see that. Then the market starts itself coming down one last time, and you get that huge week. Now I'm interested in the chart because this is the buy zone. Do I know if it'll get back there? I don't know if it will or won't. That would be a heck of a break from here, but it could happen. Markets get extended, all right? And I think you've extended this chart a bit. Where's the Bollinger Band? You're over it. So that got my attention because you only stay over Bollinger Bands 5% of the time. And if you go back on the chart, you will see that that's the case. Now, could you argue that this pattern is similar to that one? I don't think you can. In this one, you were not sideways. You were coming up, and that's easier to just keep going higher and higher. This one is a broad, wide, sideways pattern, and I think that the market can pull back. Where to is what we'll be looking at. Are you overbought? You are. So I have a market that is extended. It is overbought. That doesn't mean it can't go higher. I'm certainly not telling you to go short, but it has my interest on pullbacks to be a buyer. Amazon, I'm questioning now is now the time to come in this 182.47 area. I'm going to be looking at it real hard for my subscribers. And I'm thinking that it is getting to be that time now to look at it on a pullback in the market. RSP, I would never tell you to buy the upper Bollinger Band and be in a market that is overbought and do that. That doesn't mean you can't go higher. Do it without me is the way I look at it. BND, this pullback doesn't scare me. You are staying with the fully embedded reading. So break enough here, and I think on a weekly chart, you got to be a buyer. I'll cover that in my morning subscriber videos next week for my traders. CrowdStrike, as nice as the chart looks, and it does look good, I doubt you're going back to this green line again. You're getting to the point where it's getting a little bit high here at 308.95 in terms of that's going to be the resistance. Does it mean it can't go higher and eventually back up here? No. They kept almost all their clients, 95% of them. Now, I don't know what that cost them in subscription dollars. There'll be a number, and at the next earnings, we'll be looking to see what that is. But the worst, to me, the storm is over for them. And I love that they hooked up with Microsoft, by the way. So now these rollouts will be in conjunction, and they won't allow an engineer to make this snafu. It's not just getting fired. It would be very costly for them as a company. It's going to come from top management each release now. And how it's released. Higher lows, higher highs in Meta. I like Meta. I think Meta from here is building a base to go a lot higher. I'm wrong if you take out these lows until that happens. On good pullbacks where you're not overbought and not at a Bollinger Band, 505 area, about 10% break, I look for it. Now, you'll say, Ira, what are you talking? Folks, the weakest time of the year, doesn't mean it'll work, is often September into October. You could get a 7% correction at any time for reasons I have no idea, and if you don't, fine. But if it comes down, that is what I'm saying. These are things, I have a shopping list of what I want to buy. All right, you should have a shopping list. I have a shopping list of what I want my subscribers to buy. You should have a shopping list, okay? And you got to get the money together in order to do it. In KRE, I wouldn't be chasing the regional banks up here at a 200-day average again and a Bollinger Band. It's having a lot of trouble right here, and it's overbought. So how many times you want to discount the fact that we're going to cut rates? Pullbacks are the way to come in, not up there. That's my opinion, at least. In China, this is where it's got to prove itself. It's been in a bear phase. Is it ending? I would say this leg of it ends if you get over 43.09. That's going to be the key to me. Get up and over that number. In XLI, you're in an uptrend, but I would never tell a client to buy a Bollinger Band. You can generally do better. Just study the charts and you see what I'm saying. I realize it got the whole boost with the industrial production, interest rate cuts. This is the first of many. Folks, the psychology right now is taking over the reality. The money's got to go to work. The companies have to get orders. The consumer has to want to buy. It's there, but you're buying the psychology of the event right now, not the event. Take a look and you'll see. The Empire State numbers were great, but every other number, I think it was the Philly numbers came out, they weren't so good. XLI, lower highs, lower lows, fighting a big battle for support here. And while talking about energy, I was so happy to hear that the Three Island constellation is turning on Unit 1 for nuclear power. I told you here 6 months ago when the video was going crazy, maybe 7, I said that you're going to see that facilities have to move close to nuclear plants in order to get the power to run their products. So Microsoft, going in with them, needs power for years to come. They'll partner with them. They'll do this. It's the first of a lot. Now, unfortunately, there aren't a lot of shut down nuclear plants in the U.S. What they can build are mini nuclear plants. I brought that up before. You can go to certain parts where they're safe in the country or safer than putting them in urban areas, as you can imagine. Remember, Three Island, what was it, the 70s or so, had the disaster. And then you can take it to the grid. Now, how they're going to get it from the grid there to where Microsoft wants, I don't know. Do they produce the power and swap it out in some manner on regular lines coming to different factories around? I don't know. They'll figure it out and tell us. But this is a big deal, and this is the way that you go. Remember, wherever you put an AI center, it's almost like crypto mining. And remember what I told you. I said big crypto miners that can't make money mining anymore, their facilities should be looked at if they're big enough. And the reason is they've got cooling, they have all the facilities, they got air conditioning, water cooling, all that. Can they handle it, all right? I'm not an engineer, but they certainly, on paper, they can do similar things. Do they have enough of everything would be a question, and are they big enough? But that's where you're at. I look right here, and I can see that the market found its support, but it's still bearish. You haven't proven that you've come out. You've got to get back up and over here. Let's look at that number. See, I can't get it to move there. That one's going to move up there. It looks to me like it's about 9,200. That's what you'd have to get over in order to say you're out of the downtrend. The resistance, 89.94 this week. In the dollar, I remain in the bear camp. I am looking for a bearish crossover to develop shortly, where the 18 gets underneath the 100 and add to that the fuel. So bounces in these markets get interesting, but you are oversold. Oversold is not how I would tell you to deploy new money. You want to get away from that. In the gold market, you've got the gorilla glue trade. You had one day where you got away from it, but you've had enough here where you've hit it time and time again, and you're embedded. Breaks in the market are still buys, and I think gold is still possibly a $3,000 market if it catches on fire. This is an area where it should have a little bit of a problem in the 2650 area in gold, but I have counts that can carry you up to the 3,000 level. People were laughing at me when I said 2,600 recently. Lower low, higher high. I don't see a trend to trade off of there, and that's my news. So to catch up with what I do, because there's going to be a lot to do now longer term that we're through everything, join me during the week, all right? My morning Spider ETF video. All you do is go to iraepstein.com under the word research, and they're right there. And I put out a new video Monday through Friday, barring holidays or an illness, or I go on vacation. But even when I go on vacation, I generally record them. I'll cover at least 40 markets, and I'm doing special reports again. So this week I did GDXs, GLD, and the work was there. Now, what do you do? Well, I offer the education with this. I offer why the trades are there. Stop orders, because nobody walks on water. Where do you tie it all together? So you get that. And I do put out now for you, by the way, that's showing at this point in time where you put window envelopes, one of the studies I use, and that's on the website. But now I'm tracking the trades for you each morning. So in the video, if I say buy this or sell that, if it gets filled, I'm tracking it until finish, win, lose, or draw. We don't take everything off sometimes. We do it in percentages. So I tell you what my minimum unit number is that I think should be traded. You don't have to trade that. Just take the multiples of it, up or down, whichever way your bank account or your stock accounts go, and away you go with all that. So you put it together, you go to iraepstein.com, and there you just will see everything. You can click up here to join, and I will be doing another report this week. And I'm thinking of adding a special video of some of the stocks that I'm tracking, not in necessarily these. I got to figure out how I want to do it for you. But there is a way to do it, and I'm going to come out with a new product soon. It's called a lost momentum trade. It is meant for the guy that is an in and out trader. Might be for a guy that dates very short dated options. He'll see what I'm looking at on the chart, where it's going. You'll hear more about it. I'm getting closer and closer to doing that. And it could be for both futures and stocks, ETFs, and spiders. I'm Ira Epstein. You have yourself a very, very good weekend. And by the way, I'm going to the Notre Dame game tomorrow, so that should be fun. I haven't been to one in decades, and it should be a lot of fun. I'm going with the key guy there, so I'll have great seats. And it's going to be a ball. I'm Ira. You have yourself a great day. Take care.